behind it. So whenever you use any kind of chart program, especially this one where you are looking for breakouts, patterns, make sure that you have volatility there. And that's why later on I'll show you how those power stats come in to play. Certainly you want to, if you're looking for volatile breakout patterns such as triangles, you want to make sure that you are trading at a time period that is likely to have volatility. That is usually around the opening or the close or around the special report that takes place. If you're trading during lunch periods or on holidays, certainly you have a higher incidence of pattern failure because you're simply trading at a time when there isn't enough muscle in the market to break out. Okay, so this covers this section on our chart patterns here, okay, which is this main section here. So I really wanted to let you know, or actually it's up here with these chart patterns. So given what I said, when we look at this section, you'll know what I'm talking about since I made it clear there. Now, when you go to Fibonacci patterns, okay, these patterns are set up for traders that are looking for basically counter trend moves. You can see that in this particular one, without going into detail, you're looking at a ABC pattern, all right, which is a 3-point extension, and you can see the market's trending up, but in its forecast it's looking for a down move. So you can see that it's a counter trend type analysis. Okay, the other patterns, basic chart patterns, tend to lean towards the trending markets or markets that are moving in one direction, whereas the Fibonacci patterns tend to look for counter trend patterns. And also you get to see when you deal with these Fibonacci patterns that you're dealing with specific points in symmetry of price and time. So if you're a trader, like a finesse trader I call it, and you want to see specific price levels or market reach specific price levels and how it reacts in terms of price and time, then these are the types of patterns that are going to be more appealing to you. And I suggest that you use these more often than, say, a chart pattern. And then you also see that you have target zones, okay, that can be reached. So again, if your personal preference is to trade with exactness or a little bit more fine-tuned, then Fibonacci patterns are going to be very attractive to you. Okay, and like I showed you with chart patterns, you also have the ability to go to the advanced search, drop down to the types of patterns that AutoChartist identifies, such as 3-point retracement all the way down to this 3 drive. Okay, so you have the ability to click on this I button, and you can see that we have definitions, characteristics, and how it forms, and various other suggestions. Okay, now moving quickly, we'll move down into this chart pattern section here, and you'll see that we have a list of factors that come up when a chart pattern is selected. So here we see a chart pattern form. You can visually see that there is a support line, there's a resistance line, and these are candlestick formations. You can also see that there's a breakout to the downside, and you can see that there's a target zone. Now, down in this box is a completed pattern section. Let's go back to the previous one. A completed pattern means that the market has broken a support line or a resistance line. So it is basically completed the pattern that it has been forming. Okay, again, you're dealing with breakout patterns here. So we highlight this, or AutoChartist highlights this in yellow, and whatever's highlighted in yellow comes up here. Now, it's also identified as symbol, interval. Okay, we have the pattern here is triangle, the pattern end time, the date and the time, the length, direction, which is down and it's colored in red. We have continuation patterns. We have quality indicator. We have initial trend, uniformity, clarity, breakout in our forecast zone. Okay, I went through that quickly because you have the ability to click on this I button and it'll tell you specifically what that indicator means. So when we look at this arrow, for example, direction, it's going to be the forecast of the direction of the market upon completion. Since it's completed and it's red, it means it's a down pattern. Okay, when we click on the continuation button, it tells us whether we're looking at a continuation pattern or a reversal. And now we get into the meat of this analysis, and that's the quality of the pattern. Now the quality of the pattern, the overall quality, takes into consideration it's the average of these four major components. Okay, the initial trend, which represents the strength of the trend prior to the pattern formation. That means that as this market is coming down in here into this and starting the pattern, that's how it was rated 4 bars. And these bars range from 0 to 10. So this is a below average initial trend as this pattern started. We then have the ability to go to uniformity, which will tell us how these turning points are related. Okay, how many times they touch support and resistance, or in this case, how close they come to support and resistance. Okay, you can see that this support line has been well established in the past, and this resistance line also, because of the way the market behaved there. Okay, you can also notice sometimes that on highly rated uniformity patterns that these bottoms are equidistance apart, and as well as these tops. And we can get into clarity, which is the level of noise on the chart, and you want to look for spiky action. So this is a pretty decent 7-bar clarity rating, so it's above average, and so it shows you that there's not a lot of noise, that this is a real true pattern. Okay, where you get a lot of noise are in thin markets, and some of the equity markets that have low volume, they tend to be more spiky. So this is a pretty clean pattern, as it's the UK 100. It represents the FTSE market. And then finally we get down to the breakout pattern, and this tells us how much momentum or how strong the market was when it broke through the support or the resistance. So in this case, it's only a 4-bar momentum, and it gives you an indication as to what it's going to take to drive this market into this forecast zone. So those are the quality indicators. And then we have this gray box here, which is the forecast zone where the market can hit. Yes?
James, sorry, it's Sue here. I just want to ask one question. Which type of trader prefers the completed pattern?
What type? I'm sorry, can you repeat that?
What type of trader prefers the completed pattern?
Okay, that's a good question. Okay, we have two selections here. We have completed patterns, we have emerging patterns. So the question is, what type of trader will prefer an emerging pattern and which one will trade the completed pattern? As I said before, with personal preference, when you're dealing with completed patterns, these are the traders that want to trade a breakout, that are people that are allowing the market to trade inside of a particular pattern, and they want to wait for the market to make its move in either direction. So from a personal preference, a completed pattern trader is one that likes to trade breakouts and volatility. When you look at emerging patterns, which are patterns that have not broken out yet, these are types of traders that want to trade swings, that like to buy support and sell resistance. So you can see that inside this particular pattern, the market played the support and resistance line. So as a trader, and actually it's an old pattern, so it broke out. So what I'll do is I'll go to, for example, look at FX markets, which have more fresh signals. This is the U.S. Japanese yen emerging pattern. Okay, this type of trader tries to make the assumption that a market is going to trade or stay inside of a particular pattern. So he'll try to trade the swings, buy support or sell resistance, whereas this trader that is trading the breakout patterns or completed patterns prefers a breakout or a more volatile trading conditions. All right. Okay, now I covered the basic definitions here of these quality indicators. So let's start. Let's take a look at the poll question, and that should be up here, and that's a question that should be able to answer. Okay, and question is which is defined as a quality indicator? And your choices are length, interval, clarity, and trend change. Okay, it looks like the vast majority here have gotten that one right. It is clarity. And again, it falls into this section here of quality indicators. And so clarity indicator is key. Okay, and since we are on this topic, let's put up question number 2. Okay, and that question is, which quality indicator deals with the strength of the trend prior to the pattern formation? And your choices are initial trend, uniformity, clarity, and breakout. All right, just to give you a little help, initial usually means first, so that would be right. It looks like the majority here has it right. The initial trend is what you're looking at. So in this case, in this chart, we're looking at British pound US dollar. The initial trend is up going into this price, and then before the pattern started. So that's what this represents. Okay, very good. A lot of work, a lot of hard work there, and you've gotten that question right. Okay, now let's move. Let's make some general comments about some of these indicators. When you are dealing with these indicators, you have to remember that an easy thing to remember is that you have an outside or a beginning and an end of this chart pattern. So the initial trend and the breakout tend to be related. They represent action that's taking place before and after the pattern. So I like to see, as my personal preference, I like to see high initial trend rated markets or ratings, and I like to see high breakout ratings. Now, in the uniformity and the clarity go together, and they work what's going on inside this pattern. So when you have a uniform market pattern, or you have equidistance between tops and bottoms, it's appealing to the eye and it's more aesthetic, and you tend to have a feeling of, you tend to get more confidence that that market is going to do what it's supposed to do, or because it looks good. And that's a lot of that art or that mental side or psychological side of trading that you need. If you have confidence in the pattern, and you are looking for a triangle and you actually see a triangle, then you have more confidence that that market's going to behave like it should. And in this case, we have a triangle pattern, and you can see it does look like a triangle. You can see there's compression, and you can see that the compression of these lines is indicating that something's going to happen because the market is getting tighter and tighter and has to make its move. Okay, so you want to see high initial trend, and you want to see high breakout paired, and you tend to want to see high uniformity and high clarity. Now, really quick here, how you can control what comes up is you can go to the new search area, and you have the ability to filter your quality indicators the way you want to make it more appealing to you. So, for example, on minimum clarity, you have the ability to set it from 0 to 10. 0, you can see from this little icon here, tends to have a lot of spikes or a little bit more choppy, whereas 10 is a little bit more clear, or a lot more clear, I should say. So you have the ability to set